Good afternoon, everyone. This is Henry, and as we get into tonight's free video, I wanted to begin with some of what I was covering with you in last night's discussion. So through this same venue, we were looking at the extreme close for the trend, and after that Fed announcement, thinking that that may be showing us that the markets were a bit oversold and due for a bounce. So I come into Thursday with that way of thinking, but then when we see the overnight action, when we see where the S&P futures were actually getting ready to begin the cash session, they were marked a fair bit lower. So it does speak to the weakness of the market that you didn't see an immediate bounce off that trend reading, but I believe still helpful to have in the back of your mind. Okay, off of that little more residual weakness, you see continuation down into a psychological price point, and it actually hit almost to the tick in the cash index. But in this S&P product, I'm always paying attention to the $100 point strikes. Think about how we failed on the run up into 3,900. Again, almost just to that handle exactly. And then you're down, 200 Swift points into 3,700 that provided a very meaningful bounce. So there's several pieces of this puzzle that set up was the easiest trade of the day, and that's why it's worth recapping. But again, it's the trend reading coming into the session, even though we see a little bit of a flush, the 3,700 holds. And then the third piece of it, which is the put-call ratio getting above 1.0. So there are several ways to look at this data, but again, I like showing you guys these examples because it continues to be an informative indicator as we evaluate these decisions. But we already have two reasons to think we might bounce, and then we get a third by this reading exceeding not only the 1.0, but also the previous highs that you've seen for several weeks. So that tells us in that moment, your general average retail trader, that populace is a little more bearish than they have been for all of this amount of data. When markets are all leaning with that bearish point of view, it is usually going to be what you need to see a bounce. And I believe that's a big part of what drove the move. There was 50 handles here in the index. Obviously ended the day on a little bit more of a choppy note. But those three pieces of information, again, are what set up the best trade of the day. And that's what I tried to clue you into on Wednesday. So that's how Wednesday took us into Thursday. Heading into Friday's employment data, I don't have too much else that we can lean on because it's very likely a very binary event, right? I doubt that we open right where we are right now. If you see prices down into 3660, 3650, I think that'll be a very important, potentially completion pattern to the downside. Otherwise, I'm going to have to see a little bit of where we open and take it a minute at a time from there. But again, I hope you find the review helpful. Have a great rest of your evening, and I'll see you in the next free video. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful, and if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com, and I hope to see you in the chat room sometime soon.